Good morning. SBA financing for STR, short-term rental, hotels and motels, the smart way to scale your hospitality portfolio. So short-term rentals or STRs and boutique hotels and roadside motels are seeing renewed investor interest across the US, especially in fast-growing regions like Texas, Florida, and Arizona. With more travelers opting for local experiences over big brand stays, small scale hospitality operators are turning to SBA financing to fund purchases, renovations, and conversions. At Medallion Funds, we help borrowers navigate the SBA 7A and SBA 504 loan programs, both powerful tools for financing owner operated hospitality properties. Well, why would you consider SBA financing for a hotel or a motel? See, unlike traditional bank loans, SBA loans are partially guaranteed by the federal government, allowing lenders to be more flexibility in their offerings. So you can get lower down payments as low as 10%, 15% if you're going to renovate and construct. Longer amortization, up to 25 years, compared to a bank note at 15 or 20, most likely. Competitive fixed rate options for a short period of time, and then variable rates. Flexible qualification standards. These advantages make SBA loans ideal for operators who manage or live in on-site at smaller independent hotels, motels, or short-term rental properties. So SBA 7A versus SBA 504. Which one's going to be the best fit for your property? Well, let's look at SBA 7A product. It's great for property acquisitions, renovations, or business purchases. And generally, you have a credit line of up to $5 million in financing for an SBA deal. Some lenders will do pari passu to 7. Includes working capital, FF&E, furniture, fixtures, and equipment. It also allows for mixed-use operators like a motel with short-term rental units. So an SBA 504 loan is designed for real estate and equipment purchases, typically used for an expansion or construction of a property. And you can go up to 15 million with combined lender and CDC participation, because usually the first lien is only 65% is kind of the reason why it gets bigger. Fixed rate, long-term financing with lower equity requirements. Yeah, it sounds like a no-brainer to me. But here's the pro tip. Many investors use the 504 programs for real estate and the 7A for business assets, a blended strategy that maximizes leverage and minimizes equity outlay. So what properties qualify for SBA hotel financing? Well, to qualify, the property owner must be owner occupied. So think at least 51% for an existing building, 60% for a newly constructed building. And it's got to be actively managed by the owner. So eligible property types can include boutique hotels and independent motels, also short-term rental portfolios, bed and breakfast type buildings, vacation lodges and cabins, small hospitality franchises, also hotels and motels with on-site operations, even if some of them are STR units and can meet SBA's owner-operator rule. And if management is hands-on or held closely through a private company, it's likely going to be eligible, but we need to have a talk about that. So here are the key benefits for investors and operators. Low down payment equals higher leverage. You have to put less money into the deal. Long repayment terms equals better cash flow for you. Business expansion. So if you're going to a new market or renovation funding for a deal, those are things that work. Tax advantages through depreciation and expense write-offs. And eligibility for fee waivers for certain NAICS code hospitalities. Now, here's an example scenario. So husband and wife team operate a 20-unit roadside motel in Central Texas, and they want to convert half the rooms into short-term rental suites. Using the SBA 7A program, they can secure 90% financing, including funds for the renovation and building out of those specific to that use, which could end up boosting the overall nightly rate and overall property value within 1 year. So partner with Medallion Funds. We've got the experience to help you make money. At Medallion Funds, we specialize in SBA hospitality financing for STR property conversions, boutique hotel acquisitions, renovation loans for motels, and just a refinance in general would be another option for a motel. New hospitality construction loans, that's a great program for that. Now, whether you're a first time operator or an experienced investor, we guide you through underwriting, business plan preparation, as well as lender matching, which really takes a lot of the heavy lifting off your plate, saving you time and money. Schedule a consultation today at billrapponline.com or at where you can learn how SBA financing empower your next hospitality investment. I appreciate your time. Go Aggies. Have a good week, everybody.